Welcome to the Deep Dive. Today, we're pulling back the curtain on something really fascinating in crypto, the airdrop.
Yeah.
It started with this huge promise, right? Like a perfect way to distribute tokens, build a decentralized community.
Yeah, almost like free money for being early or loyal.
Exactly.
Yeah.
Rewarding real dedication, not just, clicking a button.
But that's where it gets tricky, isn't it? Because, well, despite that great idea, the reality, it's often much more complex. There are hidden costs, maybe even a bit of a dark side.
Okay.
So our mission today is really to dig into that, the promise versus the pitfalls. We want to help you understand this double-edged sword and figure out what actually makes an airdrop genuinely worthwhile for everyone involved.
All right, let's get into it. Let's peel back this onion, starting with where things kind of go off the rails. I always thought airdrops seemed so elegant on paper. But yeah, reality seems to hit differently. What are those hidden downsides? Why are they often such a headache? It feels like they often end up encouraging, spammy behavior, short-term thinking.
That's a big part of it. And it attracts what people call mercenary participants.
Ah, right. Only there for the reward itself.
Precisely. No real interest in the project long term. And, it's not just a vague problem. These behaviors, they lead to specific negative outcomes.
Like what, exactly?
Well, things like wash trading, faking activity, and Sybil attacks, where one person pretends to be many.
Okay.
These aren't just small issues. They fundamentally distort things. It becomes almost impossible to see what's real engagement and what's just noise. Or manipulation.
Wow. So it's not just the original idea getting warped, but the actual methods people use are deceptive. Let's talk about airdrop farming. I've heard that term.
Yeah, that's a big one. It's where users, or maybe bots, create tons of wallets.
That's hundreds.
Could be hundreds, yeah. Trying to mimic real organic usage. They game the system with bots, specific interactions, all designed to grab the maximum number of tokens.
And that ties into the Sybil attack concept you mentioned.
Exactly. A Sybil attack is basically that strategy in action. Think of it like one person using, 100 fake IDs to enter a lottery over and over.
Got it.
In crypto, it's one entity pretending to be many different users. They duplicate wallet actions, interactions, everything. The goal: just harvest as many tokens as possible with the least real effort.
So it looks like lots of people are interested, but it's just a ghost army.
Pretty much. A digital ghost army built for token harvesting.
And then there's wash trading. You mentioned that particularly impacts NFT markets.
Oh, definitely. It's rampant there sometimes. That's where traders just buy and sell assets between their own wallets or coordinated wallets just to inflate volume.
Right, to make it look like there's way more activity than there really is.
Precisely. And here's a really stark example. Blur, the NFT marketplace.
Yeah, I know Blur.
Well, it actually overtook OpenSea in volume for a while, but a huge chunk of that wasn't real trading activity. It was wash volume.
No way. Just from people farming the airdrop.
Largely, yes. Driven by airdrop farming. Think about the chaos that causes for a project trying to understand its own market.
Yeah, your stats are totally fake.
Totally fake stats. Protocols might base critical decisions on that bad data. And the worst part, airdrop eligibility sometimes gets handed out because of this manipulation. You're rewarding the cheating.
So, okay, let's make this concrete. Blur is a great case study then. Their rules were based on volume.
Heavily volume-based.
Which, as you said, just incentivized this massive wave of wash trading. So what was the result?
The result was pretty predictable, unfortunately. Users farmed points like crazy, racking up volume. Then, the moment the airdrop happened...
Dumped the tokens.
Instant dump. They sold off the tokens, took the profit, and poof, gone from the network. Zero long-term commitment. Just a quick hit.
Wow. That's not ideal for building something lasting.
Not at all. And it's not just Blur. Optimism is another interesting case.
Oh, yeah. How so? They tried to do things differently, didn't they?
They did. They genuinely attempted to reward real users, contributors, people adding value. But even then...
Still sell pressure.
Still significant sell pressure right after the distribution. A lot of recipients just sold immediately. Again, no sign of long-term belief or investment in the network's future. And I think The insight here is about human psychology, really. When you get something for free, quote unquote.
You don't value it the same way.
Exactly. You don't have that same skin in the game as if you bought it with your own money. It feels like found money. So the default for many is just to cash out.
Which creates this instant downward pressure on the token price.
Right. It's a paradox. This act of supposed generosity can immediately harm the token's value. It's a fundamental challenge for designing sustainable tokenomics, actually.
And it's not just the price, is it? What about the community itself?
That's the other major hit, the community damage. When airdrops are poorly designed, they attract these opportunists, not the people who are actually aligned with the project's mission.
So you get users who, what, don't participate in governance?
They don't vote, they don't build anything, they don't offer meaningful feedback, they don't help the project grow, they're just there for the initial handout and then gone.
Yeah, that's genuinely disheartening. Especially when you think about that initial idealistic goal. You want these projects to thrive, and then you see this dump and run behavior.
It undermines the whole point.
So how do we even get to this point? Because it wasn't always like this, right? I remember some early airdrops felt different.
You're right. Think about Uniswap's UNI token airdrop.
Yeah, that was huge.
It worked really well back then. Why? Well, it was largely spontaneous, a surprise. And it genuinely rewarded people who had used the platform early on, the real community. There was a sort of purity to it, you could say.
Okay, so that initial success, people saw that and wanted to copy it.
Exactly. That early success led to massive copycat behavior. Everyone saw Uniswap and thought, we need an airdrop too.
But then the gaming started.
Then the gaming started, and it spiraled fast. It became an arms race. Bots, fake wallets, sophisticated manipulation tactics. It all became common practice.
Wow.
To the point where, entire online communities and businesses popped up just to teach people how to game upcoming airdrops, how to maximize your take. It literally became a shadow industry.
A shadow industry for farming free tokens. Wild. So, okay, given all this mess, frankly, can airdrops even be fixed? Or is it just this constant cat and mouse game?
That's the million-dollar question, isn't it?
It feels like if there is a fix, it has to involve moving beyond these simple, gameable metrics, like focusing on something more qualitative, real engagement.
I think that's where things are heading, or at least trying to head. We are seeing projects experiment and adapt. Look at StarkNet, for example, or zkSync.
What they're doing differently?
Well, they're trying to implement more sophisticated strategies. They're using things like advanced anti-Sybil filters to try and weed out the bots and fake accounts.
Okay, detection.
Yeah, detection is key. But also activity-based weightings. So maybe simple swaps count for less, but providing liquidity long-term or participating in governance, that counts for more.
Rewarding meaningful interaction.
Exactly. And even tying eligibility to community involvement, like, did you complete educational modules? Are you staking tokens for the long haul? They're trying to engineer for loyalty and real contribution, not just noise.
That sounds promising. More thoughtful, at least.
It is. It's a big leap conceptually, moving from just rewarding activity to trying to reward intent and commitment.
But it can't be perfect, right? There must be limitations. Like, if you announce the exact rules.
People will game it. Absolutely.
Yeah.
If the criteria are totally public, dedicated farmers will figure out the minimum effort needed to qualify. They'll optimize for it.
Okay, so keep the rule secret.
But then you risk excluding genuine users. If people don't know what actions are valued, legitimate community members might miss out simply because they weren't doing the right thing, even if they were supportive.
Yeah. It's a real balancing act. Transparency versus vulnerability to gaming.
It's a very difficult tightrope to walk. There's probably no perfect solution, just trade-offs.
Okay, so wrapping this up a bit, let's bring it back to the listener. What does all this mean for you? Say you're someone interested in getting airdrops. What's the takeaway?
Well, first, understand it's rarely truly free money.
Right. There are costs.
Definitely. Think about gas fees for all those transactions you might need to make. That adds up. And your time. Farming airdrops can be incredibly time-consuming. It's practically a job for some people.
You're basically working for it.
You are. And don't forget smart contract risk. You're interacting with potentially new, unaudited protocols. Things can go wrong. So, yeah, be aware of those hidden costs.
Okay. Good advice. Now, what if you're looking at a project, maybe thinking of investing or participating? What should you look for in their airdrop strategy?
That's a great perspective. Look at how thoughtfully the team designed it. Are they actually trying to defend against abuse? Can you see mechanisms to deter Sybil attackers or wash traders?
Or is it just a simple volume game?
Exactly. Are they rewarding things that indicate long-term alignment, like staking, governance, maybe contributing code or content? Or are they just rewarding noisy farming behavior? It tells you a lot about what kind of community they're really trying to build.
That makes sense. And finally, what about for you if you're actually building a protocol, thinking about doing an airdrop yourself?
Yeah, for builders, the key question is an airdrop genuinely the right tool for achieving your specific goals? Don't just do it because it seems like the standard playbook.
Right. Think about the why.
Think hard about the why. Is your main goal decentralization, community building, marketing buzz? Because an airdrop might help with some of those, but it could actively hurt others if done badly.
Focus on attracting the right kind of users.
Absolutely. A focus on attracting mission-driven users who actually believe in your project's vision, not just wallets looking for a quick flip. Ask yourself, what behavior am I really incentivizing here?
So bringing it all together, what's the final verdict? What really makes an airdrop worthwhile in the end?
I think it boils down to a few key questions. Does it actually build a real, engaged, long-term community? Does it manage to reward the genuine contributors more than the drive-by opportunists?
And does it ultimately help or hurt the project's stability and token value?
Precisely. Does it stabilize things, or does it just create this massive immediate sell-off that damages the project's reputation and scares off real investors? Those are the critical tests.
Okay, so hopefully this deep dive has given you, our listener, a much clearer picture of the complexities here. It touches on tokenomics, behavioral economics, game theory. It's a fascinating intersection.
It really is.
Whether you're building something, trading, or just learning about crypto, we hope you'll approach airdrops more strategically now. And maybe a bit more skeptically. Always ask about the motives and the mechanics behind them.
Healthy skepticism is good in this space.
Definitely. And here's a final thought to leave you with. If a project's main strategy for getting its token out there relies heavily on rewarding behavior that's inherently short-term, what does that actually signal about their confidence in their long-term vision? And maybe more importantly, their ability to build a community that will actually stick around.
That's a powerful question to consider.